The Federal Reserve has just broken the economy. The stock market has started a major crash and people are starting to throw around the word recession. The truth is that the economy is on very thin ice and we are on the edge of a financial collapse. And today I'm going to explain exactly what's going on here and why it's going to get even worse. We've now had 3 consecutive months with job gains that are less than 125,000. This combined with unemployment figures rising to 4.3%, which is a 21% year-on-year increase, that sent the stock market into total chaos. It dropped with a value of over $3 trillion in just a day. You heard that right. That's about the same drop as the GDP of the United Kingdom. But what exactly is happening and why is the economy on such thin ice? Well, as I said, we got reports showing steeply increasing unemployment numbers, but it's not just that. It's the fact that the big brains over at the Fed have been handling the economy poorly for years now. Just take last week as an example. On the 31st of July, the Fed could have lowered interest rates, but instead they postponed cutting rates. They said, and I quote, "If we were to see inflation moving down, more or less in line with expectations, growth remains reasonably strong, and the labor market remains consistent with current conditions, then I think a rate cut could be on the table at the end of September." This is obviously a dangerous move by the Fed. Interest rates today sit at around 5.5% with inflation at 3%, meaning that gap is substantial. And this is the first time in decades we have seen interest rates so much higher than inflation. What this really means is that borrowing money actually has a cost today, whereas for the last few years, it's basically been free money. If you borrow at 2% but inflation is 4%, the size of your debt essentially decreases by 2% every year without you making a single payment to actually decrease it. And obviously, this incentivizes debt creation. It incentivizes investment into people, homes, businesses, and infrastructure. That pushes the economy round. And in a debt-based society, that's incredibly important. And as everyone is currently expecting inflation to continue to go down and drop to about 2% in the next monthly report, this gap is only going to get larger. But that report will show statistics for this month, for August, meaning we are in the drop and just waiting for the data to confirm it, and that lag can be dangerous. And this specifically is what those big brains over at the Fed seem to be ignoring. It's a bit like continuing to drive, waiting for the gas to run out without actually looking at the meter, and then when the gas is out, you're basically screwed because you didn't plan ahead. So instead of taking the decision to cut rates on the 31st of July, they've decided to postpone the decision for another 2 months. This is incredibly similar to what we saw happen in 2021 when inflation was going up and rising through the roof. Everyone knew inflation was up and continuing to spike, but the Fed ignored inflation and didn't increase rates just because they were waiting for the right numbers, even though everyone knew we already had those numbers and they had just not materialized in the data yet. Then when the Fed finally did increase rates, it was too late and the damage had already been done, and we were stuck with monumental inflation for years on end. And if the Fed's handling of that inflation crisis in 2021 and the fact that they've chosen to just ignore the signs right now isn't enough to convince you that they're breaking the US economy, all you really need to do is open up a history book and you'll see that the Fed has a history of breaking the economy. Take the late 1920s. The Fed completely failed to prevent a collapse by neglecting the money supply issues, which played a significant role in pulling America into the Great Depression. And I think I don't even need to get on to explaining how disastrous the Great Depression was. It's literally in the name. But the Fed's poor handling of the economy was not just a part of the cause of the Great Depression, it also led to an extremely slow recovery. It took basically all the way up to the late 1930s for the economy to recover, and that was largely because of poor handling by the Fed. And when it did finally start to recover, the economy started to get moving again, it wasn't even the Fed that made it happen. Instead, it was the fact that World War II had just started, which in turn gave America a massive economic boost from manufacturing and exporting equipment and supplies around the world. After hearing all of that, it should be almost impossible to deny that the Federal Reserve is and has been damaging the economy for years. But why is this now happening again? Why is the Fed so damaging to the economy? And to understand that, you need to look a little bit deeper into how the Fed does what it does and why. Firstly, we need to look at a big structural flaw within the Fed. One of the most important jobs of the Fed is to maintain the dollar's value or to keep inflation at a steady 2% rate. But this does not work effectively at all because the Fed is compromised by another one of its major goals of ensuring a strong job market or close to full employment. The flaw here is that it creates inherent contradictions. Efforts to achieve one goal undermine the other, and this is why we have so much instability, in particular over the last few years. The Fed's reliance on the Keynesian model, which is what I just described, is deeply flawed. It wrongly justifies short-term inflation to reduce unemployment, assuming that some inflation is acceptable to use up labor resources. But in reality, short-term inflation is rarely, if ever, short-term, and a stable economy needs low inflation to function properly and to ensure consumer confidence and to ensure real wage growth and decent employment. The Fed's efforts to fine-tune the economy often lead to mistakes, wasted resources, and instability. Instead of targeting arbitrary inflation rates, the Fed should focus purely and solely on maintaining stable prices as its original mandate demanded. The Federal Reserve was originally created to help banks by acting as a lender of last resort, but instead, over the decades, it's become a central planning entity that just gobbles up more and more power with each crisis that occurs. And the funny thing is that most of the time, the Fed's inefficiency is even behind these crises, which then lead to its swallowing up more power. Ever since the 2000s, the Fed has been desperately trying to eliminate business cycles, even though they are fundamental to free markets and fundamental to human psychology. Booms and busts feel like they're a problem, but the evidence shows that over the long term, they actually contribute to wealth creation, to an efficient allocation of resources, and a richer country on the whole. Business cycles are supposed to remove poorly run and over-leveraged businesses, which does make the market healthier. But with fewer of these cycles, or even none, which is what the Fed is pushing, that creates an unhealthy market that eventually leads to a crisis that's even bigger in the first place, with many businesses built on that thin ice. We all know how insane valuations of AI companies have gotten recently, despite very little evidence to show any meaningful impact on a business's profitability, and yet this bubble just continued to grow for months and years. And when this coming crisis starts to get really bad, the Fed will simply gobble up more power. And when you look deeper into how the Fed does what it does, you'll see that it always has to do this one thing: power. And that is why it's so flawed. It does not have the interest of the nation's people in mind, purely its own self-advancement. Now, I'm actually not going to sit here and tell you that the Fed is full of idiots. They are actually smart people, and they do understand basic economics, so they know what is coming. But then why are they still making these destructive decisions? Well, because they're essentially haunted by the past. Back in the 1970s and the 80s, the US saw a catastrophic period of high inflation that the Fed was not able to defeat, and it destroyed the American economy. More important than that today, though, is that the Fed's board, who were incapable of breaking the back of inflation, did so because they were scared of causing a recession. They would hike up interest rates to try and bring the high levels of inflation down, but the second that they saw even a marginal decrease in inflation, they celebrated early. They announced that inflation was deflated, and they quickly dropped interest rates back down again in an attempt to keep the economy growing every single year. What that actually led to is an environment where inflation and interest rates stayed high for over 2 decades, and those Fed board members went down in history as idiots, cowards, and failures. With the insane increase to the money supply that we've seen over the last few years, the Fed today is constantly looking back towards those dark times of the 70s and the 80s, and is desperately trying to ensure that these records that are being set today aren't left with a bad blemish on them. And so actually, the Fed knows exactly what's coming, but they're going to keep interest rates higher for longer anyway. The problem is because they are so haunted by the past, they're not focusing enough on the present, the data that we're actually seeing today, and it's now looking incredibly likely that they're going to send the American economy into a recession, into a hard landing, to try and ensure that they don't send it into another stagflationary period. In essence, the economy is broken, and it's all due to the Fed. And because of it being connected to the Fed, and with their behavior and actions likely to stay hypocritical, the stock and crypto markets are going to continue their race down to the bottom. And with unemployment and manufacturing numbers also going down and showing no real signs of stopping or slowing, we are likely going to see the Fed break the economy completely, cause a full-blown recession, or maybe even an economic depression. And of course, an economic collapse in the US will send ripples all around the rest of the world and lead to a global economic crisis with disastrous consequences for everyone watching this video in particular. So look, things aren't great, but we don't have to just sit back and take it. And a couple of months ago, I spoke about a company called Defi Technologies who are investing or acquiring into new companies and technologies, bringing traditional financial market access to decentralized finance. They've been doing very well. Their stock price has been steadily rising. And at the beginning of the year, their stock price was sitting at around about 50 cents a share, whilst now it sits at $1.73, which is a very large increase. And they just had an earnings call for Q2 of 2024 as well, with some highlights that I think you'll really appreciate.
So just to go over kind of in more detail the financial highlights of Q2 2024, the company reported a cash balance as of June 30th, 2024 of 19.5 million, compared to 6.7 million as of December 31st. The company is also holding 54.5 million in USDT. For those who don't know, that is Tether, which is a stable coin. So basically a peg to the US dollar that is in cryptocurrency, and 110 Bitcoin as we continue to ramp up kind of our treasury strategy for the company, which totals 9.2 million at the end of June 2024. As I mentioned and alluded to earlier, the company's venture portfolio and investments were valued at 41 million as of June 30th. Our AUM in Valor grew 43.7% from 508 million Canadian as of December 31st to approximately 730 million as of June 30th. And I think as of today, we're kind of north of 800 something million. Total revenues for this quarter were $133 million, 0.2 million for Q2 2024. Obviously a significant improvement from the total revenues of 7.4 million for the same period in 2023. And I think, Ryan, correct me if I'm wrong, that equates to about 31 cents and some change per share.
So revenues from Q2 of last year, 2023, were $5.4 million, and revenues for Q2 of 2024 were $98 million in US dollars, which is an insane level of growth and shows just why I'm so excited about DeFi Technologies. Even Eric Jackson's hedge fund manager came out onto Fox Business and called out DeFi Technologies as one of the top stocks to watch in the AI boom for the years to come.
I read when you had a conversation with your son, and you gave him these three names, right? DeFi Technology, Open Door, and Upstart as potential 20 baggers. I never heard of DeFi. Tell us about it.
DeFi is in the crypto space, but they run a bunch of ETFs over in Europe. And they're a small company. They're less than $1 billion market cap. And that's one of the keys. If you want to find a 20 bagger, you got to start small. I love NVIDIA, but to 20 bag from 3 trillion, that's going to be tough. Right. So DeFi is small. It's cheap. It has something like a 3x forward price earnings multiple versus people like Coinbase and Robinhood who have like 40x forward PEs. So I think it's just going to continue to do well and perform, and people will discover it. That's why I like it.
But what's really interesting me at this point in time is how a company like DeFi Technologies is set to benefit after Trump has started laying out his plan for crypto going forward. Now, it's no secret, but Trump is getting more and more bullish on crypto, and he's outright stated that he wants the US to become the world leader in crypto and by far and away be better than China in particular. My favorite line of his is, of course, that cryptocurrency will be mined, minted, and made in America. And on top of his support for cryptocurrency, Trump has spoken out against CBDCs, which have been worrying all of us in recent years, which is certainly good news for ourselves, but also good news for companies like DeFi Technologies, which are already capitalizing on the crypto world, but are set to continue to do so as well. DeFi Technologies currently has a market cap of around $500 million for a business that is generating just under $100 million for the last 2 quarters, making it seriously undervalued in my opinion. I'm sure you can understand why this company is so interesting to me, so go over and take a look at them for yourself. This seems to be a great opportunity right now, just as it was a few months ago when I spoke about them then. They trade over the counter, and their ticker symbol in the US is DEFTF, and I'll put a link to some of their materials down below in the description as well.